Okay. So car loan interest. I'm only mentioning this because the regulations dropped, and there's an important tool that if you weren't aware about it, I want to show you. So new car loan interest deduction is a significant opportunity for folks. Yeah, provided they just happen to have bought a car. Has to be a brand new car, not used. Must have had at least final assembly in the U.S., if not been fully built here. The loan has to be the first lien. The vehicle has to weigh less than 14,000 pounds. Has to be a what the code calls a personal use automobile, car or light truck. And at the time you signed on the line that is dotted, thank you, Gary Glenn Ross. When you signed on the line that is dotted, you had to have had more than 50% personal use when that note is issued. Okay, so you can verify the VINs online, and I think Samantha McGrath told me about this one. So you can go to the website right there, the Decoder website, nhtsa.gov/VIN for vehicle identification number /VIN decoder. And this will give you information you need. Now, without plugging in the VIN, you can look at the first digit. Most US ones start with a 1, although some start with a 4 or a 5. 70, 7F through 7Z. Why not just give us all of 7? I don't understand that. We should get the whole 7. Right? 2 is Canada, 3 is Mexico, J is Japan. None of those are going to qualify for this deduction. You never knew you wanted to know this much about automobiles. So you can retain a VIN decoder printout in their substantiation. I mean, most of us are saving everything digitally anyway. So if you plug in the VIN and it comes back that it's US, just print it and save it. We do that with all sorts of things anyway. We're going to retain that for 3 years from the filing date for the return. You want to tell the client they should retain other things. How do you prove the loan? Well, the 1098 VLI, when it comes out next year, probably is going to show us that. But just in case, I would tell the client to keep the purchase documents, loan agreements, which they probably haven't kept anyway, threw them out on the way out the door. And then the statement that you get. No, I don't think anybody's seen a 1098 VLI this year. I think we've just seen lender statements, all of which are acceptable under the transitional guidance. All right. I don't know. This is just some more details of what I might do. But again, most of you are digital, are not paper full, right? And you're not printing these things out. So it should take a few minutes to document this. Do you need to? I don't know. I would. It's a good idea. And then, of course, next year, you got just like they tell you, Sally, same as last year. You got the same cars, same kids, same cars, same bank account. Cool. Move on. All right. It's a stranger world we have. There's a $10,000 annual cap. If you're a single person, your income needs to be $100,000 or less. If you're married, $200,000 or less. Why they didn't make it $300,000 like all the other 4-year Trump deductions, I don't know. The deduction reduces $200 for every $1,000 over the threshold. So the number of $1,000 increases times $200 is the amount of the reduction. And I have two examples here. At $149,001, the entire deduction disappears for single people. At $249,001, the entire deduction disappears for married couples. If you do the math, $149,001 is 50 $1,000 increments. 50 times 200 is $10,000. So there goes your deduction. It will be completely phased out. Okay, so some loans are qualified, some are disqualified. I can just imagine getting these audits, right? So things that you're allowed to include, if they're in the loan, you're allowed to take the interest. Base vehicle purchase price, factory installed options, and then all those crazy dealer costs, the prep fee, the extended service plan, the extended warranty when it's financed with the first lien, sales tax, and title and registration fee. So all those things can be in that loan and no problem, deduct the whole thing. What's disqualified? Insurance premiums, standalone extended warranties, negative equity from a trade-in. So I have $10,000 left on my loan, and I have a $9,000 credit for the car. I'm going to be underwater by $1,000. That's going to come off. Aftermarket accessories that I buy from the dealer, gap insurance. Although, can you buy gap insurance on a purchased vehicle? I know you can always get it for a leased vehicle. And then anything the dealer adds on, that Rusty Jones and paint protection and all that stuff, those costs would reduce the loan. So here's an example. I have a total loan of $50,000, but that includes a $6,000 carryover, negative equity, from my trade-in, but I put down a $4,000 down payment. So my qualified amount, what did I borrow? My qualified loan, I borrowed $50,000, but $6,000 of that is negative equity, gets me to $44,000. So if we argue that the down payment was applied to the negative equity, the calculation then becomes 50 minus 6 plus 4 to get me to $48,000 qualified. So review your loan documents carefully. I looked at the last car I bought back when Edsel Ford was still selling cars personally, the last new car I bought. And I don't know, you can look at the list. I don't think it matters because it all gets you down to amount financed. But understand that you want to track both the new cash and the negative equity. All right. So we're looking at those documents to see what's in there as well, the best we can. The 1098 VOI, we said, I haven't seen one. Lenders are not penalized for not filing a form they didn't know was going to exist until the middle of the year. 2026 forward, they will need to issue one or there'll be a penalty. And the reporting thresholds are $600.